Yesterday was an absolutely huge day in the markets, and I'll tell you what, the trades were absolutely printing over at the Discord. You guys should check it out. Links in the description. I will, in this video, talk about the technicals, what I'm watching, what I'm seeing, what to look out for from here, and how we could probably continue heading in this bullish direction until some other outside force comes along and opposes it. So we're going to have to go and watch and see those levels. I have them for you in this video, some thoughts to share with you. I'll tell you later more about how you can save money when you sign up for that Discord or even that coursework that's also available in the description. In the meantime, let's get right into the charts on this one. So popping this up here for you, SPY. So check this out. We actually closed up above, narrowly, but just above, and that's all it takes. The 200-day and the pre-market hours are starting to trade above that. So here's yesterday's candle. You can see that we quickly retraced from the top of that, but the important thing is the 200-day yesterday was at 573.74. So 573 and change. We closed at 574 and change. So closing up above it, that's a really good start to things. The RSI is actually climbing up darn near 50. We want to cross that 50 as per the RSI, the relative strength index that we have down here. We want to see that, make it up and over. It's been rising for a while. Now we just need to see that next part come in where we cross 50 into bullish territory. Even on the weekly chart, if you look at the RSI there, we're at 47, so just below 50. But I said that indecisive candle followed by the next candle could show you the next direction that we go. So this is something that I'm watching for further bullishness to take place. So back into that daily chart so we can really see some of the price action here. Let me take down some of the moving averages, the EMAs that we have on here. So we actually closed not only up above the 200, but also up above this blue 20. That is something that is highly important for us if we're going to continue this. We haven't made it back up above the 20 days since we broke through it on February the 21st. So happy birthday to my wife, I guess, from that day. But moving forward there, we had that big old sell that took place, took us down below the 200. Today, we finally closed above it. We want to watch for a full candle close up above it. So a retest of the 200-day for support, find out that that floor is nice and firm for us so we can stand on it. That pushes us up further in that rocket ship. Now, something I want you to consider when you look at this is the Fibonacci retracement. So from this most recent peak to this most recent trough, you can see that yesterday we closed right at about the 38.2, just 12 cents above where that 38.2 was. That means that we have room up to 581 for retracement or 588, almost 589. So before we run into more trouble, we actually have a fair amount of upside for what could happen for us. And you can see that we did actually find pretty darn close to what we had for historic resistance from the bottom of this, which is at 575.35. And where do we peak out on this thing? A high 575.15. So within 20 cents of that bottom from where we hit that peak. So we have a little bit of chop to get through, but that chop coincides with the 50% Fibonacci retracement level. 61.8 just above that would actually put us just above that chop. So if we get up above 61.8, we might be able to bounce around a little bit more in there. I think that 50% fib is almost a slam dunk. We would be watching for that. A little bit hard to get above the 61.8 because of this pink 50-day that you have coming down through here at 589.81, so almost 590. So we actually have like a double resistance there, if you will. And if we put up the EMAs for just a moment, just to talk about those, because they can actually show us a little bit more of that near-term price support, resist, if you will, because they react more readily to the more recent data. We're up above the 5 and the 13. That's a bullish thing. We're down below the 50 on this one. So that's one that we really need to get to, which is right now is about 583. So by the time we get there, it might depress a little bit more, probably go a little bit sideways. So the 50% fib is going to be a little bit of trouble for us. That 61.8 I think is going to be more troublesome to get up and over, but I do think from right now that we get there. So more bullishness on the horizon. If we toss in a Fibonacci retracement on QQQ tracking the NASDAQ 100, there we go. There's the trough of it. We didn't make it up to the 200-day. We did not close up above it. So technically, we're still in bearish territory for this one. We have a lot of correcting in the big tech stocks, and that's a lot of what we're seeing right now is still some of that pain that happens to be lingering around there. But we did close up above the 20-day, which we haven't done since going back to, let me see, the last close that we had above it was all the way back on February the 20th. So we broke down below it. We peek-a-boot up above it, but couldn't close above it. Closed down below the 50. Big old sell-off down below the 200. So breaking the 200 is going to be the first big thing. So 38.2, getting to that 495-ish level is going to be huge for us if we can. So the 38.2 and the 200 coinciding, we can watch for a rejection there. if we do continue an upward path, which I believe that we do, and if we can get up above it, then we get to watch for that $500 psychological resist, but then we also have 503 for the 50% retracement level, and like the 61.8 is where that 50-day starts to creep down through there. So I think that we have more green coming our way, unless we get something like the personal income and outlays turns out to be negative, or something with initial jobless claims. We would need some economic catalyst or some geopolitical catalyst in order to change the direction for right now. I think that we experience a little bit more upward pressure in the markets, and net upward pressure from what we've seen, even if it is cautiously so. In the meantime, S&P up above the 200 is a very good thing. Getting the Qs up above the 200-day is also going to be a very good thing, and I think that we can get there. And so just keep on watching for that. Once we do get up above it, once again, just like with SPY, we got to watch and see, is it firm footing or not? Is it something that we can actually stand on? Just taking a moment to look at the weekly chart on this, we are up above the 50-week. And let me take down some of these other technicals that are on here, just so it doesn't distract from the other things that you see. Not only did we close up above the 50-week, but look at these candles that you have. So you have signs of upward pressure coming in, indecision, pop up there on top the 50-week, and that can be a very bullish thing to come down to the 50-week and then push up above it. The RSI, 46, so not back up above 50, still in bearish territory, but we are inflecting up that way. We could potentially get back up there. The RSI for the daily chart's around 47, so that crossed back up over the 200, standing on the 50-week, 200-day. Both of those things, along with the RSI, we do want to watch for that volume to come in. It's been a little bit higher than what we had through this chop along here with that indecision. It's still not explosive like we would like to see leading into this. We did have some towards the bottoms here with the most recent sell, which is around the time that we started showing that support, that sideways consolidation, and then finally up again. Moving over into IWM, if we put a Fibonacci retracement on this one, up to the top, down to the bottom of this thing, you can see that we caught the 38.2 at one point in time before taking the 61.8. Couldn't get up to the 7.86. Fell down through the 6.18, the 5, the 3.82, the 2.36. That's currently what we're flirting with. We're on top of the 20-day. That's good. The 50 crossed over the 200. So right now we have all three, I should say both of the faster moving averages down over the slower moving average, and then the 20 down below the 50 and 200, 50 down below the 200. So this looks like a fairly bearish setup for us. Now, mind you, we still have about $7 to the upside on this before we hit the next Fibonacci retracement value, which also coincides with historic resistance as well. So we have about 3 to 4% to go from where we closed at yesterday before we really start to run into some resistance type trouble, if you will. And being on top of the 20-day, in my opinion, is that first thing that we want to see, and we definitely want to see that continues to be support for us. So watch for some further upside if we get it. Now, mind you, I keep on throwing the caveat of economic data. That's one of the big things right now for those four pillars to prop up markets. We patched up the inflation one a little bit with the whole tariff thing, and so maybe that helps out GDP a little bit as well. And then that also, I mean, they all kind of tie together. That also helps, again, the labor market that we look at, and it can also support monetary policy through quantitative easing, lower federal funds rate, you name it. So I'm also looking very good. Do the same thing with Bitcoin. Where do we find ourselves? So for Bitcoin, up above 50. So for crypto, we're actually in a bullish standpoint right now. The 38.2 is about what we came to yesterday. And then because crypto never sleeps, there's no pre-market on this. This is just the market. And what you can see right now is that we retraced a little bit, but we're keeping so far up above that 23.6. If I put the moving averages up here, we're up above the 200-day, up above the 20-day, down below the 50. And if I put up the EMAs, the exponential moving averages, rather than the simple ones that you just saw, you can see the 50, which is this red one coming down here, also coincides with what we have with the top of this green candle right here and the 38.2. So we got rejected there yesterday, but we're staying up above the 5 and the 13. Getting the 5 over 13 is the first bullish sign. We're starting to ride on top the moving averages. So we have good movement there. Getting up on top that 50, getting up on top that 38.2 is going to be critical. That's around 89,000. That puts us back up into the towards that 0.5 retracement, which is around 93,000, but that puts us towards the bottom of this chop. Expect any amount of resistance to come in there, and if we are able to get through it, it might have a hard time doing it. I think it's going to take a big catalyst to really get crypto going. So it could be more about the Bitcoin Strategic Reserve, Sovereign Wealth Fund, news like that, things to really put us in a more of a risk-on environment. Right now, that question is still being answered a little bit, although you can see the market, some of that worry is starting to come off and it's starting to correct back a little bit again the other way. So XRP is an interesting one when we put the Fibonacci retracement on here. So if we go from the highest peak that we have most recently down to the lowest peak that followed it, you can see the chop between 23.6 and 618. We made the 786 just one day before having a huge rip back down. Now we're stuck between 23.6 and 0.5. And if we put another retracement on here for most recent peak to most recent valley there, you can see, if we look right in here, I'll try to narrow it in here and get you a good view of it, where all that chop is happening right now. And if we can get out of this chop, if we can get up above these two levels that you see where we got that rejection before, now mind you, look how they coincide. So this isn't marked up past March 11th, and look how it explains the top that we have where those two resistances came together with the Fibonacci retracement values that are up here. So getting up above there, as solid as resistance as it turned out to be, getting up on top of that is going to be just as solid of support. We want to see that happen for us for XRP. And with this narrowing that we have right now with the price action, like this thing's going to rubber band soon. Like it's going to snap for us, and we're going to watch to see what we get out of that. And it could be a very, very good thing, especially if we stay in a risk-on environment, if we get ETF approval for XRP, if we see further institutional adoption, things like that. So one last thing that I want to show you for this, let me put up the Bollinger Bands, and you can see we don't have that significant narrowing yet, but if we get it, look what we had back here for that narrowing and the explosion that we got that followed. We want to see that narrowing come back in here to help support that case for rubber banding if we can get it. So let me put that down for you for just a moment. We'll put away the Bollinger Bands. There we go. And we are on top the 50-day. We're up above the 20-day, 200-day. Got some indecisive candles here. That means the next direction it shows us, especially if we get volume support, could be that direction that we continue. So what are things looking like here? Well, it's looking like you should join the Discord. Links down in the description. 50% off your first month's subscription fee using the code word CASH when you sign up. Thousands of members over there. You got the bread bot for helping you find out when crypto, stocks, you name it, are about to move up or down, that you can trade accordingly if that's what you decide. You also have AI tools, advanced charting tools over there as well. You have the members to talk to. You have the expert panelists to talk to. I'm one of them that's over there. You also have stock mode to talk to. There's live trading that also takes place for the members that are over there. The products, services are just endless, and it's just a top-notch and wonderful community to be part of with very positive and very enthusiastic people, all trying to do the same thing, all trying to make more money for themselves and help each other also make more money as well. And guys, if you want to further educate yourself, invest in yourself, there's a link down in the description for Stockmo Academy for learning about technical analysis, charting, and trading through the bread recipe for that trading. It's the trading recipe, trading strategy that I use myself, and I gotta say it's the best that I've ever found. And then also you can find the link to also with that link for Stockmo Academy. You can also sign up for the options course or bundle the two of them together, save there, save even more with the code word DOCTOR, D-O-C-T-O-R. I can tell you, with having 17 years in education as an educational professional, there we go, with my doctorate in education, I can tell you through vetting those courses, they are solid, tight, easy, just wonderfully put together, and just a wealth of information. And you also have Discord support as well with that. So guys, thank you very much for watching. Check out those links, invest in yourself, reach for that financial freedom that we're all striving for. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. I'll see you next video.